shares of Apple are slipping in the after hours. We'll talk about that from a technical perspective after the company reported their Q3 earnings after the bell. They gave us revenue. They gave us profit. They gave us cash flow. They gave us buying back a mountain of shares over at Apple. The one thing that Apple is not giving us for a considerable amount of time now as investors is revenue growth. Where is it going to come from? When is it going to show up? And will it show up is the discussion that many will be having about Apple in the coming days ahead. What is going on, investors? Hopefully, guys are doing well out there. That is right. We get 4 times per year to talk about Apple, and today is one of those days. Over the last year, the shares of the iPhone maker up 15% year to date, or up 53%. It'd only be natural, quite frankly, for a stock of this size, and when we say size, we mean like a sovereign government size of over $3 trillion in value. Only be natural for this one to take a little bit of a breath, considering you had revenue flat, if not down 1.4% year over year in an inflationary environment, and an environment where the dollar is getting weaker, not stronger year over year. That is actually a more significant revenue decline than what it looks like on paper. Revenue coming in at $81.8 billion. That is not for the last 10 years. That is literally just over the last 90 days. We'll talk about earnings more here in a second, but I do want to show you that, look, Wall Street's not expecting anything great from Apple until Q1, which is essentially the first full quarter of the new iPhones, which we are expecting to be released like they normally are in September based on the rumors and the kind of the flow of news out of that. It is basically going to be Apple's MO. They're literally going to come out with the same device, improve the camera just a little bit, the screen resolution and these types of things just a little bit. The price might change just a little bit. And people like me will probably just buy it because, considering how much you use your phone, $1,000 or $1,200, whatever they end up being after tax, is actually not that unreasonable, to be honest with you. Now, moving over to the financials, talked about how this company produced $81.8 billion worth of revenue. That was a decline. Yeah, a decline last year. We were closer to about $83 billion. Now, this company does, just sensational job of controlling their cost of sales. Notice that actually went down year over year. You would like to see that, quite frankly. That is because, look, your product revenue went from $63.4 billion down to $60.6. Now, again, a lot of this is expected. The company is, a month away from releasing new phones. People are smart, and they realize that the phones on the market today will be either discounted or they might be able to get the new phone from their carrier. All of these phones, or I wouldn't say all of them, but a lot of these phones are there's carrier subsidies on these phones, and they tend to probably expire right around the holiday time or right around when the new phones come out. And so people are naturally just waiting for the new promotion, waiting for the new phone, but they are clearly obviously doing that at a higher degree than where they were last year because, again, these phones are really good. The carriers lock you in, and, there's not that big of a reason to upgrade. Apple's not giving us a reason to upgrade, but the services side of the business continues to hum right along. Your total cost of sales over the last year dropped actually by about $2 billion. So your gross margins actually increased. That's what you love about this company. Total net sales went down, but your gross profit actually went up from $35.9 billion up to $36.4 billion. Their operating expenses, I noticed that their R&D expenses didn't tick up. I think this is going off the top of my head, we've ticked this up by about $1 billion per quarter on kind of a run rate. That flattened out. It's still going up, but it's flattened out a little bit from 6.8 up to, we'll call that just $7.5 billion. Your selling, general, and administrative expenses actually went down from $6 billion to just under that. Your total operating expenses from 12.8 up to 13.5. Your operating income almost flat from a rounding perspective, 23 to just south of that. And when I say 23, I'm talking about $23 billion. I don't, even though these numbers aren't great, honestly, and it's in the context of the shares being up 53%. It's in the context of a $3 trillion valuation. And if you look at forward earnings multiple on Apple, it is relatively rich compared to where it's traded at, obviously compared to a year ago, but certainly over maybe the last couple of years. But I don't want to gloss over the fact that you have nearly $82 billion worth of revenue, and over 25% of that flows down to the operating side of the business. If every company out there was run like this, I mean, things, you'd be rich, okay? It wouldn't be hard to find a good investment. It's the reason why this company is so valuable. Now, the other thing that I've noticed is very interesting, just from your kind of segment results or your geographical results, is America's down, Europe's up just fractionally, Japan is down, rest of APAC is down, but look at China, okay? That's actually up. A lot of the stuff that we get out of China is that it's slowed down, the economy's not doing as good. Well, maybe they're all just spending it on the iPhone. So clearly a lot of still demand for China, considering the rest of the geographical regions outside of Europe showing a lot of weakness, actually. In terms of your categories, your iPhone actually not as bad as when you look at Macintosh and particularly iPad as well. Those segments definitely falling off. Your refresh rate on those devices, obviously probably a little bit longer than a phone. Also, the Mac and the iPad not typically subsidized by a carrier like AT&T or Verizon or T-Mobile. You're paying for these out of pocket, and so it's a little harder for Apple to drive the sales. Now, we did hear from Intel last week, and it did seem like PC demand, they felt like, was troughing, if that's a word. And look, maybe we get some growth this time next year out of the Macintosh and iPad businesses. Now, you look at wearables, it's still doing relatively well, and obviously your services business doing decent considering the lower revenues companies seeing nearly across the board. Now, on the balance sheet, there's nothing to be concerned about. You've got more cash than the company knows what to do with. It's got even more down here in kind of a non-current side. You've got, that's well north of, we'll call that like $160 billion in cash. Now, it is balanced off by about $98 billion of long-term debt. But when you come over here to cash flows, you see that this company can more or less easily kind of support that. For the last 9 months, we've gone from $98 billion down to, we'll call that $89 billion of positive operating cash flow. And again, these numbers we're almost like numb to them or immune to them. We're talking about, for a 9-month period, the company generated $89 billion, not 89 million, 89 billion. That's what most companies, not most, that's what some very few companies are worth. They're like the entire company. Okay. We're talking about that you could buy like probably half of the S&P 500 for $89 billion. That's what this company generates in positive cash flow in 9 months. It's just an incredible figure, okay, obviously, and they don't do a lot of investing in property, plant, and equipment or acquisitions, just about $8.8 billion of that over the last 9 months. Again, that's a huge number, but in comparison to $89 billion, it's really not a lot. It's about 10% of that. So what do they do with their cash? You're probably wondering, why aren't they stacking up even more and more cash? Well, they're buying back the stock. And so one of the reasons why the stock has been more or less on an elevator shaft is, look, to the tune of $56 billion over the last 9 months. That is how many shares, or that's the dollar amount that Apple has bought back of its own shares. They've paid another $11 billion in dividends to those shareholders as well. Believe it or not, last year they bought back even more, $65 billion, which, again, the shares of the stock were 50% lower, so it actually made a lot more sense to buy it lower, and their dollar obviously went a lot further, considering shares of Apple have rallied pretty hard since then. Overall, you're looking at a company that's executing on what they refer to, or I think is referred to as kind of a cash neutral kind of business, where any cash that is generated by the operating activities is essentially burned away through share buybacks, dividends, repayments of long-term debt, and any type of acquisition that the company does. They did bolt on about $4.9 billion in cash just over the last 9 months. Now, from a technical perspective, it does look like to me we have broken trend. Okay, this was a very, very clear trend that we've been in for a while. A clear trend is when you're making kind of these higher highs and, more importantly, these lower lows, and the lower lows consistently hit kind of the same point. Once you make a break, like we've done just more recently, once you break that trend, now it doesn't mean it's over. It could just be a small deviation and you get back up in here in trend and you keep things going. The other thing that you tend to do is you want to back test the bottom line, which right now is red. I'll change to a beautiful shade of purple. You want to come back, even if you stretch down, there tends to be kind of this back test moment where it's like, you know, all of a sudden all the bulls are like, oh nope, psych, we're going back into trend. You retest this area and then you make kind of the leg lower. Again, we're really kind of stretching out probably several months ahead, maybe even several quarters ahead on Apple. I'm just giving you an idea. When you go on this big of a rally, the pullback is more or less inevitable. It doesn't always come right in one fell swoop, like 4 red candles in a row, and then all of a sudden you're back at support. On a stock this size, you tend to want to actually kind of chop around a little bit before you then make that final move down. Now, you can buy, I believe, the pullbacks on this one. Really, the only areas that make sense, and again, you are buying this stock at a very, very elevated valuation and elevated levels. The areas that make sense are represented by, you know, essentially a kind of a Christmas duo of green and red here in this, we'll call it 180 range. So we're still a ways away. If these aftermarket losses hold, shares might open up tomorrow, kind of 185. It's still a solid like $10 away from an area where, and again, if I wanted 10 shares of Apple, these areas where would be where I would buy like 1 share, because again, you will have technically broken trend at that point. The question though for Apple, the most important question is, how in the hell is this company going to reaccelerate these revenues? Wall Street has them pegged at kind of a very low single-digit grower, essentially out into the future. What is this company going to do? They've gone every single route possible as it relates to the iPhone. I assume devices like the iPad and Macintosh computers will have a refresh cycle as well, but man, as an owner of both of those devices, they are incredibly well made, and they can last years and years and years before you can even think about upgrading it. Obviously, there's going to be some people point to that Vision Pro goggle headset, but if you look at Meta's success or lack thereof of selling that device, I don't think we can count on that yet soon. Still, though, year to date, Apple shares up 53%. We'd expect pullbacks. In fact, it would be healthy and would allow the market to consolidate at the very least. Hopefully, you guys enjoyed today's video. We'll be back tomorrow for the FANG Stock recap show, where we'll be dissecting these earnings and more. Hopefully, guys have a great day out there, and good luck with your investments.